Okay, welcome back. Well, TCS, of course, is going to be the stock to watch. It's missed estimates in terms of dollar revenue, profit, and margins, all below estimates. But the deal pipeline is still quite strong, with order book of over $8 billion. Sandip Agrawal, research analyst at Edelweiss, is now joining us. Sandip, good morning. Thanks for joining us. Would you call it a bit of an aberration, or is there something to be concerned with looking at TCS's numbers and the commentary?
No, so I think, we should always see the business, and stock is a derivative of the business. So I am saying the business has not at all shown any sign of weakness or any concern, because all the disappointment which is there of 50-100 basis point, depending on whose estimate is what, is primarily led by India and some small impact from the geography where COVID wave was there. Now, we were anticipating, let's say, 3-4% decline in India, and they have declined by 15%. So all the disappointment, basically, if you do the adjustment, is X of regional rural market is just, the growth is 4.1, which is slightly above what Street would have estimated. So I don't see any sign of weakness. The order book is very strong. Margins also 40-50 basis point miss versus Street estimate is there, versus our estimate it is a bigger miss. And they have taken all the cost upfront. Basically, they have given wage hike and everything. So the worst on margin is also behind. So from here, things will only improve. I will only highlight one thing, that last quarter, I clearly remember that, Infosys number was almost half of what was estimated in terms of growth. And people like me and all were very worried that, the business momentum has gone and everything. And the stock also corrected to 13-20 level, but today it is 15-70. And I think that, this quarter numbers will be decent. So every quarter, when you are having 30-40 stocks in a sector, one or two companies will have some challenge because of, this pandemic, which are not in their own hand or completely. We should not see that as a business deterioration or something. We should be only negative on a sector or a company when business deteriorates. I don't see any sign of business deterioration in the overall numbers. I've seen all the operating metrics very thoroughly.
No, I take your point that the business miss may be temporary since it is only from India. But you said stock is a derivative of the business. The derivative has gone up and away. It's trading 31 times FY23 earnings, and if I look at your forecast, price forecast, it's 40 times 23. We are not talking even 22. So I mean, is the stock past its peak for now?
So I will give you a data, Lata. Accenture last 20 years revenue growth is 7%, PAT growth is 12.4%, and EPS growth is 15%. So you have to remember that these are consistent multipliers. 2-3% more than PAT growth comes in EPS growth because of buyback. Also, currency also helps every year by 2-3%. So even if the industry grows at 10-11%, TCS growth of EPS will be much more than that, and we are in an upcycle. And secondly, another data point, in last 12 years, TCS has delivered 26 times return despite very moderate revenue growth and PAT growth. So it is not all multiple led. It is also because of the various things which they do, the margins, the consistency, the very low beta, which results into very high implied multiple. So I would only say that, we should see all these IT stocks as constant cash generator and continuous buyback and those kind of things happening. They don't have any debt. Very good business, very stable business, cash juggling business. I think their multiples will tend to be high, and they will increase going forward. What we have seen in Accenture in last 20 years, same thing will replicate here also.
Okay, Sandip, but the management coming out and saying that the potential third wave could impact business further, they themselves are watchful, and nobody knows which way all of this could head, right? Given the uncertainty, do you think IT as a pocket could move to the back burner for a bit? And what is your advice to investors? Still buy every dip, or hold on for a bit until you get more clarity on the situation?
I think if third wave comes, it will impact most other businesses much more than IT, because IT, you can still work from home. You will not decline in revenue at least. But I think if third wave comes, most of the other businesses will see much bigger impact. So in that case, again, people will fly to safety, and TCS and other things will be preferred. So I will always say that, in an upcycle, we should not be much worried. We should use all dips to buy. That is the way I will put. And we are in a very strong upcycle. You can see the order book commentary. Not one company, you see a whole universe. And secondly, we are consistently gaining market share across the globe because of our huge labor arbitrage. So I think, this temporary one geography miss or one pandemic-led miss should be completely ignored in my view. You can time your buying and you can save 2-3%, but I will not read beyond that on this.
Okay, Sandeep, we'll leave it there today. Thanks a lot for joining us. Have a good day. Well, the earnings season, of course, is officially upon us. We bring you our special offering quarter se quarter tak. Today, we are looking at large cap pharma names. Ekta, what can we expect?